Hold on. Is this coat green? Is it green? Oh, maybe coat's got to go. I don't know. Things are colors. Colors are things. Okay. That's great. Now I'm a beatnik. I think I can get going now. All right. Hey, welcome to the Russel Journal. My name is Russel Liss. Hope you guys are doing okay. I haven't put out a video for a while, and I'm probably not going to put out a lot of videos very much going forward. And of course, my sheet is being all weird. Wait, how come it's doing that? That's weird. It shouldn't be doing that. Whatever. You know what? Hold on. Do. Give me 1 second, guys. We got plenty of stuff going on here. Settings. That is the problem. There we go. Yeah, so it's been a while since I did a video. Welcome to the Russel Journal. My name is Russel Liss. This is my trading journey, and it has been kind of slow grinding to an end because I keep losing big amounts of money. In all honesty, at one point in time, I thought this hat is distracting. Okay, well, I guess I'll do it. At one point in time, I actually thought that, well, basically I was an okay trader, and now I've been losing lots of money, and I've been realizing that I really don't have a good trade setup. I haven't identified good entry and exit points. There's plenty of stuff in there that is either overcomplicated or undercomplicated. I have FOMO'd into a bunch of stocks. I've chased breakouts. I've done all sorts of stuff that's really not great to do. And this hat is driving me crazy. You guys are going to have to deal with my messed up hair. Okay, so anyway, yeah, it's been making me nuts as far as things go. It's driving me crazy. Okay, basically, I'm too close to that thing? I don't know. I can't stand how I look on this camera. Whatever. This really isn't about teaching you anything or doing anything. To be honest with you, I'm using the channel right now as a chance to sort of catalog my new setup, how I'm going to try and do this going forward to simplify my trading journey. I traded IWM today. I used this setup and it kind of worked. I was a little out of the money with my put contract, but essentially the thing worked. So we're going to use this for a while going forward and see what it is. So I'm going to go through technical analysis and show you what I'm doing and take it from there. Let's go over here to our OBS. We're going to transition to this and transition. All right. And then we go here. And here we go. We're looking at IWM. Okay, so this chart behind me is IWM. This is the daily chart of IWM. What we want to do really here is identify the trends that are happening or have happened on IWM and figure out where that might lead us to. So the easiest way to do that is you can get rid of all of the garbage indicators and everything like that you've had. You might have your favorite indicators. They may work for you. mine have not been working for me, right? So we're going to do a few things really quick and get rid of some of it to get more of an idea as to kind of where we think we're headed. So the very first thing we're going to do is we're going to draw a trend channel. And then we're going to make it a color that doesn't bug me so much. Okay, that's good. Okay. So if we go to the daily chart, damn it. Weeble's being a bitch. Okay. So if we're on the daily chart, we can see from this blue channel that I drew that we are in a downtrend. We've been trending downwards, and so that's kind of a problem as far as things go. Basically, we know as of right now, things have been trending in the downward direction. What this tells me then is that on a daily basis, I'm really looking for a bearish trend. I want to find places in here to get short. Okay. Now, there's some stuff that is also really interesting. So one of the reasons I drew this channel where it was on the daily chart. This is the all-time high. Okay. That's the all-time high. And again, you can see from there, we're still in a downtrend. We've had some bouncing and stuff like that. Now, overall, this would be really good if I'd have put in a short here and I was trying to figure out whether or not I should hang on to my short or whether this is a good place to cover. Well, the trend hasn't been broken. You're still in the downtrend. But some other stuff has happened. If you've watched the market, you've seen that we did have a recent rally that was pretty crazy. And we could probably go back and look at some of that and see how that changes the trend, right? And you can even see here that from the rally up from the all-time low, from the lows, I could even go back to the all-time low. I really don't want to do that because you got your kind of double bottom right in here. But from the all-time low, basically what you have is you have this sort of, it's sloping slightly down, right? But it's sloping slightly down, but it's mostly flat through here. It kind of it's ping-ponging back and forth in this little between the bottom of this trend line and the top of this and that whole like little, I think it's blue thing, right? So there's a couple of things that we can think now that we've kind of zoomed in and seen a closer trend. One, possibly no trade whatsoever. That you're trending sideways. That's another. But if you look at it, you have kind of a very sexy long range in here where if it bounces around in there, it can create some really great trade opportunities. Okay. So you've got one here. I'm going to make these brighter. And then one here. So come back. All right, so you've got this trading range here between about $193 and $210. That creates some pretty great opportunity if it stays within this range. Okay, and the reason is that's a huge swing. That's a $17 swing. If you've got contracts at 194 and it goes to 210, if you got calls, that could be great. Or if you got 210 puts and it goes all the way down to 193. You know, that's a $1,700 win in either direction. So $1,600 or $1,700 win. So we're going to keep it really, really simple. So, okay, great. So we've got this sideways trend. What direction within this sideways trend are we currently headed? Okay, well, we can even zoom in further than that. We can go all the way in. Go to the recent, high or low. It doesn't matter. You can go to high or low. And you can see now we're definitely in this bearish channel, okay, that's happening right here. And if you really want, we can see two things, right? Well, I'll change this one to the red. No, that's there. That one's better. And I'll put this one back on over here from the double bottom. We'll go over here from the double bottom. And we'll make this one no. All right. Hold on, I gotta pull this back. I gotta make it look right. All right, fuck you. What we'll do, you're gonna go red here so I can see you. Maybe not that red. Then we draw this channel from the top up here down to here. Whatever. They can go either way. And then we'll make this one right. That's weird color. Purple. Whatever. There we go. Something like that. All right. Sorry, that's boring. You don't want to see this. All right. So we go back in here. All right. So you can see what it did. All right. So again, you can see you got the bounce up, and then you're coming back into the bottom of this channel right here. Okay. So you can see you're starting to get really, really close. So when you come in and you have like green candles in this whole thing, because you're coming off of the top of this here, okay, and you're headed towards this, you're looking for mostly short positions, okay, because this thing is headed down. Okay. Now, what we think is as long as this trend holds, right? So here's the deal. I put in my short position here. I hold it till we get to the bottom of this trend. Now, I have a little bit of a chance to see if it breaks below the bottom of this trend, but overall, I'm more or less going to cover. And the reason I'm going to do that is because typically what it'll do is it'll bounce right here, and I just want to lock in as much profit. That's a $17 move right there. That's a pretty good gain. I'm not going to be interested in risking losing that for a few extra bucks. Okay. Now, what can happen here is then at this point I can take on a long position. Okay. Now, this is not 100% advisable to hit the bottom band and immediately start buying calls. Like that's not really, really good idea if you're going to do that. What you want to do is see it hold this 194 area, come up a little bit above it, and then if it and come up, and then it can move in the upward direction. Now, one of the things that we can use to time this next entry is the slow stochastic. Okay. So I'm going to put that indicator on. We're looking on the daily chart. Now, if you've used other indicators, the slow stochastics it's pretty much like the RSI or anything. It tells you overbought, oversold, tells you a bit about momentum and price. Okay. What you're doing, especially looking on the daily chart, okay, keep in mind, each one of those bars up there represents a day. What you really want to see is you want to see this line come out of overbought, right? You want to see some strength coming up out of overbought. At the same time, you want to see it either bouncing off of this line where they're getting green candles off of here, or you want to see it holding at this line to take on to start buying your calls. And you can then again hold all the way at least till this top part. Okay. So that's pretty interesting. Something you can do with this setup and the slow stochastic, if the slow stochastic stays under 20 on the daily chart, you can hold your short position because it may make a move even lower. Okay. So you can hold the short position if the slow stochastic stays under 20 on the daily. As far as other time frames, not exactly sure, but what I can tell you is so far this has worked a bit for me. I saw it work quite a bit today, and this is going forward. Now, if this setup doesn't work for me at some point, I will come back and make another video. I will look at why it didn't work. So basically what we're going to do to review, we're going to identify the trend. We're going to look for a high spot to start our trend to where we're currently at, like an all-time high, or we're going to look for a low, okay, an all-time low. Now, if you're on this chart, you can see that we had the all-time low back over here, but the reason I picked this spot right here to do things was because you do have you got one touch where right here, and you got another touch back here. So you have a double bottom that is acting as a higher low from this point. So you have a chance that this is probably the bottom for the year as of right now. There could be some sort of stock market adjustment that happens later on the rest of the year. But as of right now, this was a pretty good spot to see the trending from. Again, so back to what I was saying. Identify the trend from either the most recent high or the most recent low, okay? From a very recent low, right? And then what you're going to do is draw your trend all the way out through here, okay? You're going to decide what's the bias of that trend. Is the trend upwards or downwards, or is it flat, okay? In this example, our trend is slightly biased downwards, but mostly flat, okay? So then what we do is go with inside the trend and see what the swing lines are, so where the swings are. We get this move up here, and then we get this move down here. Fantastic, right? Woo! All right. All right. Now, where we have to go with this is we take it to, and last thing on that, if the slow stochastic stays under 20, we can hang with this trade or continue to reshort it at the next day or whatever, as long as it stays oversold on the daily chart. The other chart timeframes are different. And I should probably say thank you to Ira Epstein for giving me this kind of setup. He does something similar with Bollinger Bands. I highly recommend anybody go check it out. All right. So now we have all of that stuff going on. So what do we want to do? Well, we want to go see what's happening within the world of stocks. Okay. And I'm going to delete all that stuff too. Okay. So we go within, we're here. I pulled up the 30-minute chart. I've been trading on the 1 minute a lot, or throughout most of my trading career, which is just a couple of years. But I'm moving to further longer chart periods because these moves are just, especially now that I'm trading blue chips and ETFs, we have this big move, these very big moves, right? Okay. So again, I bet you can't guess what I'm going to do. Would it be draw a trend line from that high right there to where we're currently at now? You got that straight. Okay. So kind of on a daily time frame, we have an idea as to what direction this thing is going. Okay. We're still heading into this direction, right? Son of a bitch if it ain't still going down, huh? All right. So now what are we going to do? Okay, we haven't traded anything on this yet. So what are we going to do here? Well, it's pretty much the same deal, right? We're going to look for, so because our trend is in the downward direction on the daily, because our trend is in the downward direction on a shorter version of the daily, and because our trend is in the downward direction on the 30-minute, we're going to be looking for short positions. We're going to be looking to go short, okay? So it's really that simple. We find the direction that the chart is going. We're not looking for bounces and wild swings and other shit like that. All we want to see is what direction the chart is going. Again, something that you can look at is over here is that, yes, you had this low spot over here, got the bounce up, right? So you had a couple counter trend rallies, but they did sell off pretty hard. And keep in mind that on the daily chart, our slow stochastic is still an oversold. So we are still looking for short entries. And again, if we had our trend line out here, trends out here, we would have shorted this move. We would have shorted this move, right? Because what are we looking for? Short entries, right? And if actually we had pulled up we'd have pulled up an actual trend line for this would have been the bottom of the trend. And I can show that later if I want, but it's not really necessary. Right now, this is the trend down. Okay, so what are we looking at? Hit the top of that trend line, take a short position, try and ride that sucker as far down as it'll possibly go. Now, cool thing about, you can see over here, I lost money on this put. I paid $3 for the put. It was a 195. I know it's kind of a long shot, and I'm a little strapped for cash, so it's kind of the best I could do. That put right there almost printed. So I also did a really good job. I bought at the top of the trend, and I held and rode the trend continually down. We didn't get there today. The put is expired. We will be trying to do a little bit better. I'm going to put more money in this account later. So that gets pretty good. So, okay. Now, let's go and delete some stuff on the chart now. Okay. So I'm going to go back to the 4-hour chart to show this off. It's not going to be very good on. This is not very good. Oh, that's good. That's actually better. Well, it's kind of lousy. I got to get rid of this indicator. Okay. So how then do we know that our trade is failed? There's two things we have to do. We have to establish, one, what is our risk? Okay. We know what direction we're going. We know whether we're going to buy a put or whether we're going to buy a call. We know we know at the top of the trend we're going to try and buy or try and go short, right? Because everything's in the downward direction. And if we're going in the upward direction, we would do the same thing. How then do we decide, one, where to set some sort of stop loss in case this doesn't work, right? And two, how do we decide where to enter the stock? Okay. Well, we've obviously decided we enter the stock at the top line of the trend. Okay. When we get there, that's what we're looking for. What we don't want to see, and so what we're okay, this is where it gets confusing for me. We need to identify a pattern of higher highs and higher lows as price targets for both risk assessment and for there's also possible entries and exits. Okay. So if I go to the chart and I look at my set of highs, I have highs right here. I have another high right here. And I got another high. You want to get high? Right there. I got a low right there. I got a low right there. And okay. So very professionally done, Russ. You are a champ. All right. So very simply put, I got high up here. I got high up here. And I got a high up here. Also, these highs are all lower than each other. I didn't get as high at these points. I just got lower highs. Okay. So it's at these points that you're looking to set in your put position. How do we identify that? Well, Buttercup, real easy. How do we identify that that is the high? In real fucking time, how do we do that? Because this is the thing that's been killing me. We draw our trend line. Okay, beautiful, huh? Look at that. Okay, so how do we know that this is all right? Here's the deal: we come up, we hit that high, and we sell off, right? And before this, we were coming up, everything was coming up. Well, that would typically be the top of the trend. So we would have cut out right there. That's where we would have ended, right? We would have taken our profit on our long position here, and we'd be getting ready for a short position or another. We would either be looking for another long position or another short position. How do we know when we're not looking for another short position or another long position? Well, this low right here gives us a pretty good indication that we're not looking for another long position. Okay. We have started trending downwards. Okay. And then we come up and our trend has changed. This is our all-time high, comes down. We hit this high right here. And then somewhere in this bad baby, because we rejected, we're okay to put in our we're okay to put in our short position. High, lower high. Okay. Now, what we are looking for here in our chart is we are looking then for this to move down, right? We're going to move down below this low. If we get below that low, we can hang in there. We can stay in. Okay. We can hold our stuff. Okay. And then, okay, what happens then is this low becomes our trailing stop loss. Okay. If we go down below this low, we come back up, we break above that low, that's where we're going to go out. Okay. Is sort of, if you think about this, right? We let the first high happen. We took our profit from our long trade. We didn't short any of this. We waited for the bounce. The bounce gave us this trend right here. And then we began to go, oh, okay, well, we got a new trend. It's heading to the downside. So we're going to short that, right? And then back into the bottom, right? And so that's kind of how we're looking at it. We go, okay, here's the high. Here's our low. Here's our lower high. Enter the short position. We either could break below this. We could either go to this low and stop. That's fine. However, we also know that our trend line is bottom trend line. Here, I'll even do this. This will give us a little bit clearer indication. Whoops. Okay, see this line here? We came down, we're coming down to the bottom of that line, and then we kept going, right? And if you're trading this, especially on the 4 hour, you just keep dragging it out. It keeps holding, and it just keeps going down, and it keeps sticking. That trend line keeps going with it. So we know we can ride the trend. Now we keep moving our trend. You do have to kind of keep dragging it along with you. Otherwise, you're going to miss it, or otherwise you're going to like freak out. But as long as that trend holds, one, we put our short in way the fuck up here. So by the time we're down here, we're deep in the fucking money. We're in it, right? We can risk a little. That's fine, right? It keeps going down, keeps going down. We keep dragging our line out. We keep dragging our line out. Right? We keep dragging our line out. Oh, we bounced back up. Did we take out this low? No. We can keep going. Keeps going down, keeps going down, keeps going down. Now we have our identified trend. Now look at this bad baby right here. See this? See all these candles that are kind of like posting up right over here, right over the midpoint of our trend? Ooh, there, right? Can't break over it, can't break over it, can't break over it. Gonna look for the break to the downside, okay? So we can hold that for a while. We're fine, we're safe. And we can, now this is where we can begin to sort of incorporate some of our indicators. Oh, look, the MACD momentum is crossing over below price. Oh, on the 4-hour. How much does that mean this is probably going to go down? Well, look at the last time it happened. Whoop. Right? Gonna go for a leg lower. Now, what is sort of the caveat to all of this? There's some stuff where we want to see like trends are going to change. Okay, so we're going to talk about this, the transition of trends. Again, you had this is a huge move up over here. A lot of money right there, right? Huge move up to the top, right? And all we have to do is drag our trend along with us and we can just follow the trend. It's absolutely fantastic, right? So what's the caveat to this? Well, what's the catch 22? Where do we miss this, right? Well, where we miss this here is that the news. Okay, here at this point, back over here, the Fed came out. They did their rate hike. It was only 25 basis points. The market said that's already priced in, and now that news catalyst gave us a short-term change in direction. Okay, what happened back over here then? Well, two things happened over here, right? One was the Fed started talking about a 50 basis point hike, pulls back, and I shit you not, this high, the second high right here, I think it was Brainerd, or it's either Bullard or Brainerd, one of the two, came out and said they're going to do multiple 50 basis point hikes. And when that happened, that catalyst pretty much killed everything. That catalyst pretty much sent this whole downtrend in. What they're pricing in right now is like 4 50 basis point rate hikes and another 3 or 4 25 basis point rate hikes. They're looking at like the possibility of 3%. The other thing that happened in this is that they are unwinding the Fed balance sheet at the same time as they are raising interest rates, which normally doesn't happen, but they are being more aggressive, and they're being twice as aggressive as they were back in the day. So you've got this inflation rating, and that's absolutely nuts. It's insane. Okay, now, so can we go to a smaller degree and see how any of this works, or if any of this works? Okay, and you absolutely can. Now, we go down to a 5-minute chart here, and we're gonna look for some more day trading type stuff. Okay, we're gonna be much more interested in the day trading range of things. So we're gonna look at a very smaller chart. We're going into the 5-minute, and again, we're going to look at this kind of as it grew throughout the rest of the day. And again, it doesn't change any. We just keep moving our trend line. We obviously, we're opening up right here, right? We're opening up right here. We've already determined that because we are in a downtrend, we are going to be looking for short positions. We've already determined that. Right? So we don't have to go, oh, what is it going to do? Is it going to work? Is it not going to work? We already know we're in a downtrend. We want to ride the downtrend. Okay. So we set up our thing. We go, okay, well, what did we do on Thursday last week? Well, we went into this downtrend. And then we do the pre-market. Oh, we went through this downtrend. Right? So what are we looking at? Well, we draw a new trend line from the high on Thursday all the way to opening of today. And we see that the downtrend holds. So what are we going to do? Well, the minute it gets to the top of the downtrend, we can take our put position. Okay. And that, if we did that, right, this would have yielded us, right? We can hold that. And as long as, give me 1 second. Now, check this out. So we hold this position. As long as it stays underneath the top trend, we can hold our put position. And look what happens. It rejects the top trend and it breaks down. Finally, yeah, it pushes, it fights through, right? Now, if you're day trading this, this is how I would do this, okay? I would not sit here and hold on a day trade. I would not sit here and hold through this. What I would do, right, is I'm dragging my trend with me. I'm dragging it with me, right? And the minute we get into the bottom of this trend, right, I shorted here. We didn't break over. We sold off. The minute we get to the bottom of that trend, I am there taking profit, okay? And you can see a lot of guys had the same idea, just so you know, because that's what caused this bounce. There's a lot of people short this market, and you have this bounce. But good news for you if you're day trading, right? Keep going, right? Go all the way to that peak, right? Oh, we're up over the top of it. That sucker comes back. See, look how it's just barely over the top right here. Gets back into our trend. Boom, you're short right there. You can ride this guy all the way down, right? Keep going. Now, there's a few things you should know really quick before. And I'll show you this. Okay, so run. All right, we don't exactly hit our bottom line. All right, that's okay. How do we know that this was the end? That green candle right there with the wick on the bottom, that is when you see that you get the big move down from the top of the trend to the bottom of the trend. When you see that wick coming in, that's buying pressure. It's time to go. Okay. So that is how you know to get out of that one. Don't go ahead and put on a long position because market's going to close anyway. I mean, you could probably try and get that really fast. But now here's the thing that's crazy though. Watch this though. Trend shifts a little bit. We get a little wider, but not much. Still in the downward direction. Lower high right here, right? So we know we're still headed down. We're good. You're fancy, right? You got this. Okay. So it's really as simple as playing with these trend lines, identifying, are they up? Are they down? Are they sideways? Okay. If they're straight sideways, go ahead, buy the bottom. If it breaks below the bottom, cut your stop. If it goes up to the top, take your profit, right? Whatever time frame you're playing on, these trend lines, this is pretty much some of the easiest stuff that you can do. As far as I have found, like I said, I tell you that one put just a little too far out of the money. And it was just the closest I could afford with what little money's in that account right now. I am going to put more money in it. I'm going to prove this concept over the course of the next couple of weeks because hopefully I will be getting into a earn to trade sort of setup. But yes, it's pretty much this simple. You need to start on the daily chart. You need to get the market sentiment. You need to figure out what the news catalysts are. Are they good? Are they negative? Because if you get a good news catalyst coming in and you're short, that can change the trend, right? You can change the battle. Just like we had a bullish thing. Hey, there's not going to be a recession. Oh, yeah, but we're going to do multiple 50 basis point hikes. And that pretty much killed all of this, right? It sent us into this and is giving us one of the worst Aprils. Just so you know, April is notoriously like bullish. Again, from my guy Ira Epstein, apparently 20 out of the last 25 Aprils have been bullish Aprils. The market has given gains. We still got like 10 days left of April, so we'll see how that actually plays out. But as of right now, not looking so hot for April. And then May will be a blood. If April's bad, I'm assuming May will probably be pretty bloody because there's an old adage that says sell in May and go away. Basically, after that second round of earnings, nothing gets good. Everybody goes on summer vacation and all that sort of stuff. So probably looking for a lot more downside in this market. Now, the caveat to that, the things that we want to be watching for this year, we're going to keep an eye on the CPI data. CPI data gives us the rate of inflation. Consumer Price Index tells us how much things have gone up in price, what percentage. Coming in at around 8.8% last time, really killing things off. And they're not 100% positive that inflation has peaked. However, I will tell you, they give you one CPI print that is below the previous month, and you will see a rocket ship that you are hoping you are going to be on. So I would recommend to myself, again, most of this video is pretty much for me, that we don't have put or call positions into CPI data from now on until once we have that data and we know that it's better than the last month and that inflation may be on the decline, then we may think about taking a longer put position or something of that nature. But for the most part, I would say do not hold into that CPI data thinking it's going to give you something. It is also kind of notable that it's a trick of the bulls that into stuff that's really sell worthy, they have been rallying pretty hard. And it may not just be that, it may also be so on the bull side, we buy the rumor, sell the news. If you're bearish on the market, it may be a thing of like sell the rumor, buy the news. But I have been seeing a lot over the last couple of weeks. Sell signals typically wind up being buy signals, and buy signals also have been buy signals. So everything's a buy signal. I can take you back here and show you where we have all of these crossovers, and through here, this green, all this green going through here should not be there. It should have been massive sell signals. They should have been dumping, moving out. We have low volume days. That's the other thing that we need to keep in mind, is that the volume of the markets has been down a lot. And that's another reason why we really should be excited to get that CPI print that is lower than the previous month or below expectations, because one, that will usually be some sort of indication that inflation has been priced in. It will also be some sort of indication that not only that will be priced in, but it'll also be that words just left me. Jesus. There is a lot of money, right? The liquidity has gone out of this market. Okay. And somebody has a chart somewhere, go to Twitter, Google current market liquidity chart. You'll get one, something, right? It left in January, we went from peak to all the way down here. Okay. That liquidity has to go somewhere. And right now, I'm guessing it is sitting in cash on the sidelines, waiting for a home. Okay. So we get one CPI report that is lower than any other thing, or other things you can keep an eye on. If the price of corn comes down, if the price of wheat comes down, if the price of that stuff starts coming down, price of fertilizer comes down. We got some of this. Well, let me go back to the daily really quick. I'll do this one too, because I could talk about this shit all day, just so you know. So, delete all. Okay. Okay. So on the daily, we got this crazy bull rally, lasted almost 3 weeks, was insane, just madness. Part of what caused this was that it wasn't just that, hey, inflation's been priced in, Fed rate hikes have been priced in, we're ready to go, we got that, right? It wasn't just that, okay? One of the things that happened through this thing is trucking and shipping rates came down, and they lost 35% in a couple of weeks, and really drove this thing up. Okay. So what you want to look at, the price of things around you. If beef is getting cheaper, or chicken is getting cheaper, or corn is getting cheaper, or it's got a couple days of pulling back, or oil is coming down, right? If you really, if those things start moving in the downward direction, that could signify the end of inflation, or the inflation spiral to the bulls, right? The bulls are looking for something to prove that they're not going to die, that it's over. They're expecting a bottom somewhere. Okay. So one of the things is when they find it, they are going to hammer this market. It is going to happen. It is going to come. It will be fast and furious. The other thing on the other side of that I want to make sure to put in here is from what they have told me about markets. This is not my knowledge or anything I did research on to find. This is hearsay from me. I haven't confirmed it at all. But what typically happens is we get an inverted yield curve. Okay. The market, after the inverted yield curve correction, then it will have a correction, and then the market will have a top. It will put in a top. It will go to an all-time new high. Now, right now, the estimates I heard were the S&P over 5,000. Then what happens after that top is typically a crash. Okay. So again, you're going to have this insane, crazy bull rally the minute that inflation is whatever. The thing is the echo of that inflation lasts for a while, and you'll begin to see earnings get worse and worse and worse and worse, and not sure when it's going to come back around. And when that happens, that typically causes some sort of crash. Or the other thing that does kind of tend to happen, and this is my thought process, is that somewhere in all of this zigzaggy mess, somebody got underwater on something, right? And you can go back to 2000 or 2020, and where they got underwater on oil when they shut down the economy. And you see the zigzaggy mess, and it just went, right? So that's very realistic, is that like somewhere in here, somebody got underwater on something, right? We get the end of inflation, you get stuff opened up. I guarantee you retailers will have way too much product on their shelf, and they will begin dumping product just to recoup their investment. Okay. And if that happens again, you'll see, okay, it'll go down. It will go down. So anyway, so again, looking for basically what we're looking for, this to continue to sell off, hopefully at some point, right? Again, it's in the downward direction. Looking for the market to get some good news catalyst. We're waiting for what that good news catalyst is. Have the rally, right? Figure out, get things going again, figure out what it is, and then we get the crash. That's typically how they say it goes. My thought is we're probably going to get retail inventory collapse as they deflationarily dump shit, bringing in the recession, which will then bring the interest rates back up, and the cycle will start all over again. That's just kind of the cycle. And time frame, somewhere in the next 16 to 18 months. Well, it should be 16. It was 18 to 12 last month. So it's like probably at furthest out, probably another 17 months. If Powell is correct, there is a chance that Powell is correct, and we have a strong enough economy to not have a recession. But based on how my friends are slightly starting to get laid off, a little bit of the trickle, it would not seem that's happening. So with all of that being said, that is a lot to take in, a lot of stuff to look at. This is how I'm going to be trading. I will do an update when it doesn't work anymore. And in the meantime, why don't you guys go ahead and pretend I said some sort of catchphrase, and have a good night.